What's up, ladies and gents? In today's video, I want to show you what would be left in your pocket if you were earning £30,000 a year, and the differences of taxes that you would be paying if you were employed, self-employed, or trading via your own company. For the purpose of the limited company, I've based my calculations with the most tax efficient way through the use of a small salary and dividends. Also, these calculations don't take into account any other deductions other than the taxes, national insurance, and minimal pension contributions. So things like student finance repayments are not considered in these calculations and are definitely something that you're going to have to take into account if you are someone that has a student loan to repay. So without further ado, let's get cracking and let's get the calculations up. So the first one we're going to look at is if you were employed. So the important thing here is that if you are employed, you pay your taxes as you earn your money. So most likely you're not going to be left with a big bill at the end of the year. You might actually have some money to reclaim from HMRC. However, the first thing we're going to look at is, okay, your 30,000 gross pay. So this is the first figure. Now, in order to arrive at a taxable income figure, we're going to take away your personal allowance, which is the amount of money you can earn without paying tax. So that's £12,500. So you get a taxable income of £17,500. So the first thing is to deduct, or rather calculate, the income tax, which is going to be charged at 20% because you are still within the basic rate band. So 20% of 17,500 is £3,500. So this is the amount of income tax you're going to be paying to HMRC for this full £30,000 figure. The next thing is the national insurance contribution, and it is charged at 12% on the amount which is over the threshold. So the threshold is around £792 per month. So we're going to times that by 12, and then we're going to deduct that figure from the full figure of £30,000 and find out what 12% of that is, and that comes to £2,460. The last thing we're going to take into account, which is another deduction, is pension contributions. So in the UK, if you earn over £10,000 a year, you have to contribute to your own pension. So this is the workplace pension. This is something that your employer is going to provide, but you have to contribute 5% of your income from the amount that's actually subject to a pension charge. The way it's worked out is qualified earnings, and that basically means that every month you can earn £520 and not pay any pension contributions on that. The other thing to consider when it comes to pensions is that you can actually usually get tax relief on most pensions. So HMRC, the government, is going to contribute 20% of the amount of your pension into your pension. So rather than paying 5% of your pension, you're actually in essence paying 4% of your pension. So first of all, let's find out what the actual amount is going to be. So £520 times 12 to find out what the yearly qualified earnings threshold is. Now you're going to deduct that amount from the full 30,000 figure and times it by 4%, which gives you £950. So just to summarize, you've got your gross income of £30,000 minus your total taxes of £3,500, your total national insurance contributions of £2,460, and your pension of £950. Which gives you, in essence, a net income of £23,090. So the next one we're going to look at is sole traders. So when you're a sole trader, the big difference is that you do your own taxes. You don't pay taxes throughout the year. So at the end of the year, you do the calculations and you have to pay essentially a lump sum for the taxes. The other difference is also that the national insurance contributions are charged at different rates. And in terms of pensions, that is something that you have the option to do yourself, but you are not, in essence, forced to contribute to a pension scheme. So for these calculations, I haven't included any pension contributions. So once again, first of all, we'll start off with the gross income of £30,000. And in order to work out the taxable income, we're going to deduct the personal allowance of £12,500, giving us a figure of £17,500, which is what gets charged 20% for income taxes. So once again, that figure comes to £3,500. Next, we're going to work out the national insurance contributions. So here, the difference is that you've got Class 2 national insurance contributions at £3.05 per week, and that is only payable if your income is over £6,475 in a year. The other national insurance contributions are called Class 4, and they are charged at 9% for the amount over £9,500 up to £50,000, and if it's over £50,000 it's charged at 2%, but for these calculations that is not relevant. So first of all, we'll deal with Class 4 national insurance contributions. So we'll work out the amount on which the contributions are actually payable on, and that is charged at 9%, and it comes to £1,845. Now, Class 2 national insurance contributions are at £3.05 per week, so times that by 52 weeks, and it comes to £158. So now if we summarize, we've got the gross income of £30,000, the total taxes come to £3,500, total national insurance contributions come to £2,003, giving you a net income of £24,497. So this is what you get to keep after paying all your taxes and all the deductions. So when it comes to the limited company, one thing to bear in mind is that you are two separate entities. So the limited company deals with its own taxes, and you personally deal with your own taxes separately. So when we start off with operating income before your salary of £30,000, the first thing we're going to consider is your personal minimal salary. So that salary is basically at a rate of £792 per month times 12 months, which comes to £9,504. The reason we are doing this is that it reduces your income chargeable to corporation tax for your company because it is an allowable expense, and you also don't pay any national insurance contributions or taxes on that salary because it's below both the personal allowance and below the national insurance contribution thresholds. So that leaves you with taxable profits in the company of £20,496. So when we charge corporation tax at 19% on that amount, it comes to £3,894, leaving you with profits for dividends at £16,602. Now, what we're going to do is look at this situation from your own personal perspective. So first of all, we're going to add up all your income, so salary at £9,504 plus your dividends at £16,602, which comes to a total of £26,106. Now we're going to deduct your personal allowance at £12,500 and also the dividends allowance at £2,000, because you can utilize that and not have to pay any dividends tax. So your total taxable income will come to £11,606. Now the only tax you're going to be charged is the dividends tax at 7.5%, and it comes to £870. You do not have to pay any national insurance contributions, as you don't have to pay them on any dividends income, and because your salary is below the threshold, there is also no national insurance contributions to pay on that. So just to summarize, you've got your operating income of £30,000 minus your total taxes of £4,765, which is basically the dividends tax of £870 and your corporation tax of £3,894 added together. And that leaves you with £25,235 of net income. Now, just to finish off, we'll put all of these side by side. So when you're employed, you're going to have £23,090 left in your pocket. When you're a sole trader, you're going to have £24,497, And if you are trading through a limited company, altogether you're going to keep £25,235. So you can see the difference between being employed and trading through your own limited company in this instance means you get to keep an extra £2,145. Thank you for watching this video. I hope you enjoyed it. If you're enjoying these videos so far, I would really appreciate if you could subscribe to my channel, leave a thumbs up on this video. If you've got any specific questions around taxes or finances, please leave a comment below and I can try to make a video around it. And other than that, I will see you next week in another video. Peace and love.